This is our group video report. The paper analyzed JB Hi-Fi's annual reports for 2 years from 2015 to 17. It provides an overview of the financial and social performance for these 2 years and explains the differences between the company's profit and loss and statement of comprehensive income. Also, it analyzed of the item of property, plant, and equipment and stating whether to use revaluation or cost model in their measurement.
The primary activities are sale and the retailing of home consumer products in Australia and New Zealand with over 180 outlets. It mainly operates the brick and mortar stores, which sell consumer electronics, for example, GPS and car audio computer, and so on. It also has an online store and its commercial division sells electronics and telecommunication equipment. There are 4 categories financial ratio to evaluate the financial performance. Firstly, liquidity ratio. This tells us whether a business is able to meet its short-term obligations when they fall due. Here we have used the current ratio to analyze the performance of JB Hi-Fi in the financial year 2016 to 17 and 15 to 16. The current ratio has decreased from 1.57 in 2016 to 1.32 in 2017. Secondly, efficiency ratio. The ratio indicates whether the management of the company is efficiently utilizing the assets of the company to generate sales. Here we use the inventory turnover ratio to analyze the efficiency of the company. The inventory turnover ratio has remained relatively constant, only a slight increase of 0.22 in 2017. This indicates an improvement in the efficiency of the management. Profitability ratio. This ratio determines whether the company is generating enough revenue and managing costs to have residual income. Here we use the net profit margin to evaluate the profitability of the group. The profitability of the company has slightly declined from 3.8% in 2016 to 3.1% in 2017. Fourth, leverage ratio. This indicates the way the company is financed either through debt or equity. Here we use the debt to equity ratio to evaluate how the company is leveraged. The debt to equity ratio has increased from 1.45 in 2016 to 1.87 in 2017. This means the company is using more debt than equity in 2017 than in 2016. This ratio of debt to equity is also very high for the company, which poses solvency risk. In social performance, in its social statement, the group has indicated that it recognizes the importance of being socially responsible and tries to work with consumers, employees, and suppliers to give back to the community under the following programs. In financial year 2016 to 17, JB Hi-Fi's workplace giving program, Helping Hand. This program is donations from employees, executives, and directors to charitable organizations. This program is found in both Australia and New Zealand countries. Through the Giving Hand, Australia's company has managed to donate a total of 2.1 million in 2016 to 17. In New Zealand, this has seen the program giving 88,000 in the financial year 2016 to 17. JB Hi-Fi is confident that through the business and employee contributions to charity organizations, it is making a notable social impact to the community. In the financial year 2015 to 16, the company through its Helping Hand program raised 1.8 million in Australia and 65,000 in New Zealand. The group has contributed 50,000 to the Employer Leadership Group program. The Change for Change program in Australia in the financial year 2015 to 16 has contributed over 50,000 in Australia and 25,000 in New Zealand.
difference of the profit and loss and total comprehensive income for both two periods arises from other items that may be reclassified subsequently to profit and loss. The two items recorded under other comprehensive incomes are changes in the fair value of cash flow hedges and exchange differences on translation of foreign operations. The total comprehensive income is composed of profit for the year and other comprehensive income. Profit and loss includes matching of revenues and expenses arising from operations. According to our judgment, these two items cannot be classified as extraordinary or non-recurrent items due to they don't fit in the definition of extraordinary items. Bragg also said that the criteria for the item to qualify as extraordinary is if its occurrence is infrequent and the item is unusual in nature. An event is considered to be infrequent if it is not expected to reoccur by the management. For an event to be turned unusual, it must not be related to the day-to-day operations of the business. Though it is sometimes difficult to distinguish an extraordinary event from a non-recurring one, Hitchner defines a non-recurring event as one whose probability of occurring again is almost zero. Therefore, the gains losses from translation of foreign operations as well as changes in the fair value of cash flow hedges are not events that can be classified as non-recurring. According to Investopedia, gain or loss in translations of foreign currencies often fluctuate, so the events are likely to recur and they happen more often.
JB Hi-Fi's items of property, plant, and equipment are measured at cost according to notes to the financial statement number 10A titled Measurement and Recognition. The note states that plant, equipment, and the leasehold premises are stated at cost less accumulated depreciation and impairment, if any. Holligate and Berkeley state that GAAP requires an entity to give a true and fair view of the financial position. An example of different ways that can give a true and fair view is subsequent measurement of non-financial fixed assets, which can be stated and costs or be revalued. Intendants have a choice whether to use cost model or revaluation model in valuation of the items of property, plant, and equipment. He also states that making the choice companies should weigh to benefit against cost of each model. The major setback when using the fair value model is that an active market for this kind of assets is not always present. Thus, obtaining a fair value may not too costly or may result to inaccurate values. These inaccurate values are less reliable and may negatively affect the capital allowance deductions.
Like most of the other companies, JB Hi-Fi Limited lists some of its properties which is done in accordance to the AASB, a body that is responsible for developing and maintaining financial reporting standards. There are changes in the treatment of operating leases as described by the current AASB 117 that is currently being used and the proposed AASB 16, which will be rolled out from January 2019. The company leases many of its stores, and this is subject to the current lease guidance where the lease payments are recognized as an expense on the straight-line basis. For the financial year beginning from January 2019, the single lease model will be introduced where all the leases will be accounted for in a similar manner to the way the finance leases are accounted for. This will affect the treatment of lease in the presentation in the balance sheet classification and many changes in the lease accounting. According to the IASB estimate, there are more than $2 trillion of leased property is not reflected in the balance sheet. Since the new change in accounting will essentially eliminate the accounting distinction between the operating list and the finance. It is evident that it will bring the previously off-balance sheet entries into balance sheet, and this will consequently affect the profits. The same will also affect other valuations such as the consumer price index increase, which may require the measurement of this liability asset in the subsequent period. Due to the exceptions in the applicability of the IFRS 16, such as the not being applied to the short-term lease of less than 12 months, lower value assets such as those with less than $5,000, the profitability, the financial statement are bound to be more accurate and depict a fair view.
Compare the JB Hi-Fi's annual report from 2 years. The group's financial performance was better in 2015 to 16 compared to 2016 to 17. They did a good social performance during the 2 financial years by taking part and contributing towards charitable organizations. The item on the other comprehensive income in both periods do not qualify as either extraordinary or non-recurring transactions, and the revaluation model is the best way to value the non-financial fixed assets because it's more relevant to make a decision by using current information.